The drop was around 24.4, around 25%. The drop that we are experiencing now is 14.3%. So historically, it's not yet even close to the larger drops that we've seen in the previous year. So, hey guys, so it's the end of January. Where's the market right now? It's not the most optimistic starts of the year. What is happening to the PSEI? What's the chart telling us? And let's talk about the market in general. So if you want to know more about the PSEI, you want to know what's happening, what the charts are telling us as well, check this video out. Hey guys, so it's officially January 31. At the end of this video, I'm going to show you what the charts are telling us, where the PSEI is headed based on what the charts are saying. But just for today, the market hit 7,200. We're back at the 7,200 levels. Please remember, I remember it crystal clear. January 2013, the market zoomed past 5,800 for us to hit 7,400 at 2013. So at 7,200, we're back to where we were again in 2013 levels. The first time we saw the market hit past 7,000 plus. But that being said, the market dropped by 2.6% for today, a total of 7.9% for January 2020. And please remember this, the downward movement was pretty much also in conjunction to what happened at the end of the year. There was a lot of things already being talked about that dragged the large cap stocks that would have pushed the index higher, but you can't really expect the market to be up if Ayala Corp, Ayala Land, SM Prime, BDO, and SM is not really pushing and doing well. And you have to remember also, within the same month, Ayala Land got hit because of the Techno Hub issue, and I made a video about that. Then SM Prime also got hit because of the declaration that there will be no reclamation in the MOA area, which a lot of people were already pegging that it would give an upside to SM Prime. So when you add all of that together, you have SM Prime, which is a very, very large part of the index, and you have Ayala Land, which is a very, very large part of the index, not really pushing up. Then you also have Ayala Corp being dragged down by Manila Water, being dragged down by Ayala Land, and it's not also pushing up. Then today you saw SM also being sold down. Then you have a lot of the other conglomerates such as GT Cap also down. So how can the market push up? How can the market go higher? Then you also have the Taal volcano explosion. As you all know, it also has an economic impact, especially to Southern Luzon, especially to the economics of that areas, especially to the industry and the businesses in those areas as well. Then you also add the coronavirus that I think sentiment, just putting everything into sentiment, the outbreak and having one reported case here in the Philippines also added fuel to a market that was already bearish. And if you've been following the videos that I posted over the past few weeks, I've already shown you that way before all of this, we've already seen bearish confirmations about the PSEI. So whatever we see in the charts is a confirmation of what's happening also as well. So what I love about technical analysis is it gives us a heads up on what's going on. It gives us some sort of a general, I pressed my phone, some sort of a general path to where we could see the market headed. And the style and the narrative there is basically this: as long as we see it's still bearish, as long as there's still no reversal signals, as long as breakdowns are still happening, then we can't really expect the market to push up, no matter how cheap it looks, no matter valuations are attractive to certain companies. The name of the game is to exercise patience up until we see some changes happening. That's if you're looking at it from a trading perspective. But of course, if you are an investor, by all means, find those stocks already that those dividend yields will be attractive for you, or find those stocks already that the valuations look already very, 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 very cheap for you as well. But since the market is bearish, you may need to exercise patience if you would buy up until it starts to reverse, because as of this point in time, there's still no signal. Now, let's look at the charts. If you look at the charts, you will see a couple of things. Number one, I mentioned this yesterday. There was a breakdown from the 7,450 support level. Because of the breakdown of the 7450 support level, there was a very, very large acceleration still that happened, a large selling that happened. So if you see this, 5 consecutive days of selling for those who attended their Stock Smart sessions, you know what it means when you see this indecision candle followed by a large red candle as well. So right after that, this was January 24, roughly a week ago, Monday selling, then large selling on Tuesday, then Wednesday the market was still red, but it was trying to hang on to a thread. It was hanging on to the support. But after that, boom, yesterday, large selling, then even larger selling today. And as you can see this, I'll try to zoom in so you see it better. If you look at this, it tried to push up, denoting that there's buying here because the 7450 level is a support, but selling predominantly was stronger and pushed it down here. So there was selling here. There were some sort of people who wanted to buy here, but the sellers started pushing it lower. That's why it closed here. Now, you notice it here that the 7265 level, I plotted it as a support range. It also got broken. So the next possible scenario, the next possible narrative is the PSEI will try to look for where the next support level is. I'll try to put in MACD for you guys as well, so you see that since we crossed the zero line level last November, which is also consistent to the 200-day moving average, the market has been pretty much bearish and it has broken several support levels already. Please remember, whenever you see markets break a lot of support levels, the more support level it breaks, the more bearish it is. The more moving averages it also breaks, the more bearish it is. And if the longer moving average also is still relatively bearish, you can't really expect it to have a push higher. So from MACD perspective, since November, the market has been bearish. From the 200-day moving average perspective, it still has been bearish. And please remember this, the market will still behave based on buyers and sellers, no matter what news we see, as long as we see sellers pushing the market slower, or there's no compelling reason for buyers to come in and buy the market higher, you can't really expect it to go up. So it broke the 7.7 level just this year, then broke the 7.4 level just yesterday. Then today it broke the 7.250 level. So MACD is what I've said is bearish. I'm putting in the 20-day moving average so at least you have also context. Moving 20-day moving average is way far, no short-term reversals happening. Both 20 and 100-day moving average are also all bearish as well. So you have 50, 120, and 200-day moving average all pretty much bearish. And if I'll try to add this into the equation, you'll see heightened selling, also larger volume, meaning a lot of people are escaping. I forgot to mention this at the top of the video. Foreigners are also selling as of this point in time. So the question is, will they come back? Will they start to buy? Of course they will, but we don't know when. And if you're a person who you can't stand the volatility, it would be better for you to stay in cash right now and wait until we see some semblance of buying. We see the next support, where the next support level will be. But as of this point in time, we've broken massive support levels as well. And just to put the RSI, we're already in oversold levels. So just for you also to know, next week or in the next few days, should there be a knee-jerk reaction pushing the markets upward, it's just because the market is sideways. It's just because, not sideways, but oversold. And you have to remember, there will always be a knee-jerk reaction every time the market gets sold down very, very fast, or there's a lot of irrationality. And that's what RSI is trying to capture. So RSI is already saying that there was a lot of irrationality, fast types of selling that. Please remember this, if it's oversold, it does not mean it's going to reverse. It just means that there might be a lot of people who might think it's already cheap and they will start to buy. But anyways, because of the breakdown from the 7260 level, let me start to zoom this out further. Here, the next support level that could possibly catch the market right now is here. It's a 7160 level. I posted this also yesterday, so you can also reference the video from yesterday. But pretty much, you have the 7160 level, which will try to protect it. If it does not protect it, we could possibly fall to 68. And this was a level that we hit last November 2018. So this is some sort of more than 14 months since we hit those levels. And if I'll zoom out even further, if that does not hold, if 68 does not hold, you could pretty much peg this as the next level of support around the 65 levels. But the last time we've hit that level was around January 2017. So if you notice it, there was a large downward projection last January, which brought the markets from 8,000 all the way to 6,500. We were over here, July 2019. The current drop, just so we can measure everything, the current drop from here to the lowest point here was around 20%. From the peak here all the way to where we are now, we're just down 14.3%. So if you will try to measure also the large drops that we had, so the 2017 drop, 2016, August 2016 drop, if you want to remember the news narratives on the August 2016 drop, that was the time when Duterte started cursing the Pope and Obama. That was one of the triggers, and that's when also foreign funds started to sell. But that was a 20% drop. Then, if I'll show you here the peak from this particular movement, please remember the market rallied December 2016 from the low of 6.5 all the way up. I remember this, I was in London at this time. January 2018, the market hit 9,000. So just to measure it from the peak here all the way to its lowest point naman, if you will try to measure it, it was roughly around 24%. So just measuring the lowest points of retracements, if you look at 2016 to 2017, there was a 20% drop. If you are looking at the drop from 2018 to November 2018, the drop was around 24.4, around 25%. The drop that we are experiencing now is 14.3%. So historically, it's not yet even close to the larger drops that we've seen in the previous year. So let's see if how big these drops will be. If the drop continues, and at least it tries to attack certain levels of support. It goes to 7,150. It's only a 15% drop. It goes to 6,800. That's when it closes to somehow near 20%. If it drops to 6,500, we are now around the 23% level. So those are the levels of possible retracements where the market will go. But I'll keep you updated. What we do want, though, what a scenario that we want is the market starts to consolidate, because as it starts to consolidate, there's a level now of buying. It's a level of buying that people are now bottom picking. People now are thinking that it's cheap, and somehow the selling has stopped. So I'd rather see the markets consolidate, move sideways a bit, then it hit a level, then start to bounce up again. Because when you see markets hit this and bounce up again, there will also be quick and fast profit taking as well. But I'll move you through whatever's happening in all of this so that you get updated in the markets. But I guess that's it. Comment below what your reaction is in all of this. Comment below if you are buying because of this. Comment below if you want to stay in cash. But I hope this gave you a good update on what's happening in the markets as well. So for those who want to attend all of our sessions, I have Stock Smart sessions. All of them are in the description. If you want to know more about what technical analysis is, that's what we're going to talk about in those sessions. It will be in Taiwan, Manila, London, Auckland, New Zealand, Sydney, Doha, Qatar, Singapore, Dubai, and Tokyo. All of the details are in the description below, plus the online courses that I have with Chinky Tan and Shansi, stock market business, for all of you guys who want to learn more. And of course, my books in Shopee are available as well. They're all in the description below. But I hope this video gives you insight on how you can trade the markets, that you don't have to base everything on emotion. You can see everything from the chart, so you can also trade logically, and you can trade with conviction, because that's how you win. You win when you come in not emotional, when you come in basing everything on your own strategy, when you come in basing things on logic and not emotion, and you just exercise an amount of money that you can afford to lose when you trade in the market. So I hope this helps you, and I hope this gives you the right conviction to trade the markets. This is Marvin Guillermo, ending January with this not so good news about the markets, but I hope this video helps you trade well, trade strong, trade smart. And if you're new to this, super appreciate it if you can subscribe and hit the bell so you get updated every time I create new content about investing, about the stock market, anything that will help you reach your goals of financial freedom. So roll the outro.